So, as a way of review, we're talking about specific folks that are covered and are exempted for FICA. And then on the next slide, we moved into a discussion about independent contractors versus employees, and I'd like to just do a little bit of review. So I've just got this guy up because it's the slide before what I'm really talking about. So what is an independent contractor again?
Self-employed.
Yeah, they're self-employed. He or she's self-employed. So if you are an independent contractor, can you have employees? Sure. Right. So if your company subs with me to do the prep, to paint a building, right? I'm an independent contractor and I can have employees, right?
So just like the lawn care, like Nike, so you're like a lawn
Sure.
business, then you have like 3 other employees.
Sure. Just because I'm independent doesn't mean I can't have employees. I certainly can have employees. I would say most of my tax clients are independent contractors.
But they actually have payroll employees, not just subs?
Yeah, like the one I got in last night is a good friend of mine who owns a preschool and a yoga studio. And she has preschool teachers, yoga subs, right? So, but she's an independent contractor. What's the difference in the law for OASDI and HI? So if you're an employee, you're under what? What law? Not Fair Labor Standards Act. Well, I mean, you are, but not as pertains to OASDI and HI. You guys know this. What law promulgated OASDI and HI? FICA. What law am I under if I'm an independent contractor? SECA. Thank you. SECA, Self-Employed Contribution Act. FICA, Federally Insured Contribution Act, right? Let's see, let's just do some rates. If I'm paying both shares of HI, this is nothing you can find on your screens. You just need to think about it. You guys are all like looking at your screens. Why does she have that up there? It's not up there. And what is the rate if I pay both shares of HI? How much? I agree, 2.9. 1.45 plus 1.45. What is one full share of OASDI and HI under FICA? So I'm just an employee, what do I pay? 7.65. 7.65%. What do I pay if I pay both shares of OASDI? 12.4 is correct. Great job. What do I pay? I know it's like, oh. What do I pay if I pay both full shares under SECA? 15.3. This is getting trickier now. What do I pay if I'm an employee and I'm making $300,000 a year? What do I pay between the 250 and the 300? So what's my total?
If you're just an employee?
Just an employee. I'm on the amount between 250 and 300. I'm done with what? Long done with. Long done with OASDI. 1.45 plus 0.9 equals 2.35. 2.35. What if I'm self-employed and I'm making for those dollars I made between 250 and 300? I've got to think about this. 1.45 plus 1.45 plus 0.9, 3.8. No. Good point. We've talked about this before. Make sure you understand this. That 0.9 is only for the employee share. So even if I'm paying, what do I say when I'm like, hey, what's your SE tax? Yeah, self-employment tax. And that implicitly means that 15.3 or 2.9 or 3.8 or right? Okay. And what else was I going to ask you? Oh. If I'm self-employed, do I declare my income on my 1040 like you and I do for our wages? Yeah, but it just goes on a side schedule called a Schedule C, which is really, the name of Schedule C is profit and loss for a business. Most of us, if we get a W-2, we just slap that right on our 1040.
Non-employee contribution?
Compensation.
Compensation. I know,
Yep.
see something.
Yeah, compensation. Close. We know all this. How does an independent contractor on that third bullet get his or her own Social Security taxes on net earnings to the IRS? So my little tax business, say I make 10 grand a year. How much am I going to owe? Mental math. For SE tax, if I make 10,000, how much am I going to owe?
2,900?
I think 1,530, aren't I?
Is it?
7.65 plus 7.65, I'm going to owe 15.3%
Oh, okay.
SE tax on my net earnings, right? So I gave you a nice round number, 10 grand. Right off the top, that's $1,530, and that's not what other two taxes. Federal income tax, and it's not state income tax. See how your SE earnings can get eaten up real quick? And if you're completely dependent on that, in other words, well, boy, I've got to pay my own health insurance. Oh, nobody's matching me on my pension contribution. No dental insurance, no life insurance. Holy buckets. It's something, I'm not discouraging entrepreneurialism, but it's something to think about when you're penciling out the numbers. Those of you that have businesses know this. But back to my question, how does the independent contractor get his or her SE tax and FIT to the IRS? Electronic file what?
Deposit.
We talked about this once, kind of briefly.
It's like this acronym.
Sorry?
It starts with this like acronym that starts with.
It is an acronym that starts with an E. $10.40 estimated payments. Make them 4 times a year. April 15th, June 15th, October 15th, and January 15th of the next year. Why? Because you and I that have W-2s, how do we get our FICA and FIT to the government?
Through our employees.
Our employer takes it out and deposits it. I don't have a choice.
So what do they use for, how do they use it for, as an employer doing it for the employee? Would it be the same way or how would?
So if you come to work for me, Shiley, what am I going to do when I run you a paycheck? I'm going to calculate your FICA.
Yeah.
And I'm going to calculate your FIT based on your W-4.
But is there like a way that they have to say like they hired you and then like, give it? Like, does that make sense? Like a file?
No, they don't know. They just really, they fill out the 941. They actually make the deposits and then they reconcile it on the 941 to make sure that they took out what they were supposed to and deposited what they were supposed to and on the time frame that they were supposed to. So which is back to my point I was making before I got off on a tangent, is that you and I pay our taxes as we go, don't we, through our W-2. These guys who have self-employment tax, the IRS doesn't let them hold on to their money all year. But they don't make you pay every week. You got to pay once a quarter, 4 times a year. I'm sure you guys do this. Okay, 1040 ES. The example you heard me talk about earlier where I referenced a 1040 ES, anybody remember what the example was? It was my person that made like 3 grand a week in tips and only made $85.20 in minimum tipped wage. How is she going to get all of her taxes to the IRS because she doesn't have enough wage to eat it up? Do you see what I mean, or no? Not really?
Is that part of that allotment?
No.
No?
Yes. What's minimum tipped wage? How much do I have to make a week? $85.20. Now, take the taxes out of this. If I work the roulette wheel at the Bellagio and for 1 week, which this is not at all uncommon to make six figures in some of those big rooms on the Strip, how much just FICA do I owe on that? You can use your calculators. How much FICA do I owe on that?
That's 1 week, right?
Mm-hmm.
Is it 3,000
.0765.
Oh, 60%.
0765. Right? More than I've got. And that's not the fit. Do I have to pay 7.65 on this guy too? It's $5, whatever. But point being, she doesn't have enough wages to withhold taxes on. So this is an example of an employee who's going to have to what? Make that 1040 estimated payments, right? So one of the things that I really work with clients doing, because I can guarantee you, a lot of these people, they get to April 15th and June 15th and October 15th and January 15th and they're like, and they pay me to calculate their estimates. I'm like, you need to write out a check for $1,830. They're like, yeah, I don't have that. Most people don't. What do you have them do, practically speaking? Budget. Every single week or every single 10 days or however often you get the system set up, they need to move X amount of dollars into a tax savings account. Okay. That's not as easily
So the employees
said
can
as done.
also file such as employers.
One more time.
Because that was mainly for employers for that form, but employees do it also.
That's not the 1040 ES?
Yeah.
No, that's for you as the person filing his or her 1040. So what I'm saying, like in my example, like, okay, so I've got a job and then I've got a consulting job, business. My job, I don't need to worry about getting taxes to the IRS. The university does all that. But then, you've got X sitting over here that you owe on. Well, I could wait till the end of the year and get even, but I'm going to be penalized for doing that. I'm going to have to pay a penalty to the IRS. And I don't want to do that. So I calculate every quarter, how much did I make this quarter? And I multiply by 15.3% plus my highest marginal income tax rate. And then I cut them a check, and I fill out this little form, and I do one for Montana too. And then I send 2 checks, and I do that once a quarter. And you should do that if you have a rental, if you have a side business, if you're this person that makes a ton of tips. Otherwise, you have this nasty surprise at the end of the year, and most people don't have the money sitting there. Okay, so we're still talking about FICA. What are taxable wages? Well, it's lots of stuff. It's not just your wages and salaries. It's also all your bonuses, your commissions. What's this third thing we'll say? Cash value of meals and lodging provided, but only if for employees' convenience. What the heck does that mean? What's an example of meals and lodging provided for the employees' convenience?
Such as I've heard that AmeriCorps does a lot of things where they'll make sure you have a place to stay and meals, and it's also it helps with the employers. They're not having to do as much. They know they're going to be there on time or be at.
Yeah, because you're right there.
Yeah.
So, in the example you just gave of AmeriCorps, is that for the employee's convenience or the employer's convenience?
I feel like it could be both. But I
It's
don't
really
know
for
if
the
it's
employer's
yeah.
convenience. Then it's not taxable. Okay, so we've got Blackfoot Cafe here, right, where our culinary students study. If they gave us free lunches 2 days a week at Blackfoot, sort of laughable, but if they did, would that be for their convenience or our convenience? It would be for ours. It would be a benefit, wouldn't it? Then we'd have to pay tax on it, the value of those meals. But if I'm living out in the woods and I'm a firefighter, and they put up a camp and they bring in food, that's for their convenience. I can't go somewhere every day and stay somewhere, right? See the difference?
So you give another example of one that is for the employees' convenience?
Sure, like all the campuses in Silicon Valley have 4-star chefs. So like when my kid worked at Tesla, I mean, he walked around with a badge, and when he goes through, you can't believe this laundry list of benefits they have. I want to go get a massage. I want to go have a $25 salad for lunch. Swipe, 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 swipe goes his ID. That was all taxable to him, okay? Because it was a benefit.
Yeah.
He didn't have to swipe, swipe, swipe. He could bring a peanut butter and jelly sandwich. But also, a lot of people on the Tesla campus are like, I need to go run errands on my hour lunch break, right? So they left campus and went and picked up a hamburger and ran some errands. Does that make sense? Yes or no? Okay. And fair market value of non-cash compensation. Non-cash compensation is exactly what it says. It's some way to compensate you that is not dollars. Like what? Well, like gifts. Hey, thank you for being top salesperson of the year. You get to go to the Westin in Kauai for 2 weeks and take 8 of your best friends. That's compensation. That shows up on your W-2. Okay? It looks like a gift until you realize, oh my God, $10,000 of gift showed up on my W-2. So is it free? No, because you owe a ton of tax.
And so that's just up to the employer to
Get that dollar value on your W-2. Sure, sure. And companies that do a lot of that, in other words, use a lot of those sort of tools for compensation, that's a big red audit flag, for sure.
Why?
Well, because if I'm giving you cash, that's easily traceable, and you better be running that through the payroll system. If I'm like, oh, hey, I'm going to pay your membership to Missoula Country Club, and I'm going to send you and your family to Disney World, and that gets the IRS's interest. Because it's not as easily traceable, yeah. Stock payments, again, you don't see a ton of that in Missoula, but like all over the West Coast with all the startups, I mean, that's a huge part. Like, they bring these young, hot talent pools onto these big name campuses like the Facebooks and the Teslas, but I mean, 20 years ago, they're a whole new set of startups now. And they pay them nothing. They give, they work them 80 hours a week. They pay them $50,000, which gets you a doghouse in San Francisco. But they load them up with stock. And it's not worth anything until what?
They make it.
Yeah, until the company is one of the, whatever, 0.2% of startups that hit it big. And then that stock becomes something. Fringe benefit. Here, I'm going to give you a corporate car to use. And, or you get to fly around on my employer-owned plane. This all sounds far-fetched here, but again, it's not far-fetched in lots of markets. And that's going to show up on your W-2 at the end of the year.
But that's only if it's personal. So
Yes. So here's the scoop. Hey, Lisa, I own a medical device company, and you're my top sales rep for the Inland Northwest. So you need to go around to all these hospitals and sell my medical devices. I'm going to get you an Escalade because I want you to look like money when you pull up to these hospitals and talk to a CEO. But also I want you to be safe. You're driving around Montana, Inland Northwest in the middle of the winter. So Escalade, 2019 Escalade's probably what, $70,000 car or something crazy? So at the end of the year, I'm like, hey, Lisa, how many miles did you drive that personally? And you're going to produce a logbook, or probably an app, and go like, oh, I drove that 12,000 miles personally. So then I'm going to go to a IRS website, and I'm going to pull out 2020 Escalade, and it's going to make me charge her 60 cents a mile. 60 cents, 12,000 miles, $7,200 going to show up on her W-2, all taxable. Versus, hey, here's a 72 Pinto. Okay, on the website, that's going to get you 2 cents a mile, right? So it's going to put $24 on her W-2. Bonuses, vacation pay, group term life insurance. This is kind of a big deal. So do you know what that is? Group term life insurance. Have you ever heard that terminology? So just group insurance is whenever you insure a bunch of people. And there's different kinds of life insurance. There's term insurance and there's whole insurance. Term insurance is just the kind of insurance that if you die, then your beneficiary gets a chunk of money called face value, right? And most of us have that once we have families, so that if one of us dies, the other one's going to be okay, particularly if you have kids. And so you can provide in your company, everybody that works for you, up to a $50,000 face value. So for example, here at the university, we have a policy that the university buys for us for 15 grand. So if I die, my husband gets 15 grand. It's really like, for your final costs, right? They don't have to pay, I don't have to pay any taxes on the premiums the university pays to carry that, because it's under $50,000, the face value. But what some companies will do, like say that I've got a startup and you guys are all worker bees and these two over here are my CFO and CEO, I buy a $5 million face value policy on them. Why did I do that? Because that's part of their compensation package. They're like, if you want me, you got to pay me X, plus you got to do all these things, and one of them is buy a $5 million policy. So the premiums on a policy like that are probably 20 grand a year. That shows up on the W-2 because the face value of the policy is over $50,000. So, question? Austin, you look puzzled.
Yeah, so is that the life insurance thing, is that what the employer pays? Okay.
Yeah. So, and again, like our employer pays for it, and it's just a pretty standard benefit. It's enough so that if I die, my husband has money to pay for my burial. But if the university had a $5 million policy on our president, Seth Bodnar, so that if he dies, his wife gets $5 million, that's not to cover his final costs. That really is compensation, isn't it? So then you have to pay tax on the premiums. We know this, tips greater than $20 in a calendar month. What's exempt? Oh, this is exactly the opposite. Exempt wages means you don't have to pay FICA on it. Meals or lodging for the employer's convenience. I have a peach farm in Georgia and I'm 180 miles from the nearest town. I'm probably going to set up housing on my farm for my laborers during harvest season. That's not going to be on their W-2. It's for my convenience, right? He's the farm owner. Sick pay, but only after 6 months off. This is really short-term disability. So I have a policy so that if you're injured, this gets a little in-depth. There's two kinds of disability, one for the first 6 months and then one for 6 months on. If you're not back to work after 6 months, it's probably going to be something more long-termish, and that's a different kind of policy, and that you don't have to pay FICA on. Let's just leave it at that. That first 6 months, you do, because it's kind of like it's income replacement. Pay differential if you're in the military or a reservist. Any money your employer puts into your retirement plan? My employer puts in 5% of my gross wages into a 401k. Yay! Does that show up on my W-2? Do I have to pay tax on that? Read the title to the slide. No. No, it's exempt. Anything the IRS really wants to encourage you to do, like as an employer, help your employees with health insurance. Help your employees fund their HSA. Help your employees fund higher education. Help your employees fund retirement. Anything the IRS or the government wants you to do as an employer, they're going to make it non-taxable. And then the last one is I assist my employees with higher ed, right? So I pay anything up to $5,250 a year for your tuition and books. And it's got to be non-discriminatory. And it doesn't mean discriminatory as in the 6 protected classes. It means discriminatory as in everybody, regardless of where they are in the pay scale, can take advantage of it. So it's not just like for mid-management people to go get their masters. It's if my janitor wants to go get her certificate in sales and marketing. Right? Anybody can take advantage of it. Okay, this we all know. We should know these numbers off the top of our head. 132.9 is the max. The 0.9% Medicare has not been rescinded. We've looked at these numbers. In 1950, there were 16 workers for every person collecting benefits. By 2042, that ratio is going to be 2 to 1. And then you think you should all think about how old you're going to be in 2042. Anybody retired? Close. I'm going to be toddling around a little old folks home by then, but hopefully, God willing. But that's worth building into your plans, right? Okay. Let's see, what do we got? All right. I'm going to put these numbers up there. Oops. And we're going to try and work through them. So one of the things that's an issue with FICA, which is probably pretty self-evident, 141.824. Okay. Is if somebody's under the cap and we want to figure out their FICA, all you need to do is multiply by what? 7.65, easy peasy, right? So, I'm sorry, let's back up and kind of get a little more grounded here. So, what we've been practicing is running paychecks, right? Yeah, just a sec. Let me just write this down. Can't read that? Okay. Basically, we're running checks, right? And we spent all of Chapter 2 doing this. And now we're trying to figure out this. And my point is that if somebody's under 132.9 cumulatively for the year, and I want to figure out FICA, what do I do? 7.65. There's nothing to talk about, is there? If they're between... So 0 to 132.9. And this is a single person. That's a whole nother number, isn't it? All they're going to pay in that range is what? Between the 132.9 and the 200. 1.45. You'll get this. So I'm making more than 132.9, right? And then now what am I paying? We just did this. Yeah, that one. Okay. I would ace this test. I'm being silly. Okay, so the question is, if they're down here, there's really not that much to think about. If they're here, we know this. Where it gets tricky is when you're straddling, when you're in a check that's straddling one of these numbers. What do I mean by that? What I mean by that is my year to date before today, so say, my year to date on 11/1 and I'm running an 11/15 payroll. My year-to-date check on 11/1 was $130,000, and now I'm running the 11/15 payroll and my check's going to be $5,000. What's happening on my 11/15 payroll? I'm straddling the cap. So some of it's going to have the full amount, right? And some of it's only going to have this amount, right? Or my last paycheck was $190,000, and today I'm making $20,000. What's happening on this check? Yeah, I'm straddling that cap again. So do you see the concept we're dealing with here? Okay, let's try a practical example of it. I've got to check this real quick. 15th and 30th. Okay. And at this point, when I'm telling you to run a payroll, we don't know how to calculate fit or sit, so we're just doing gross minus FICA. Okay. My annual gross is 141.8. So clearly I'm going to do what? At some point.
Figure out
Okay, so I don't think we need to worry about overtime. And I guess I should tell you that. I mean, plus I didn't give you hours or anything, but at this rate, I'm going to be what kind of employee? I'm going to be exempt. Right, that $455 a week. Okay, but that's not the issue. The issue is, what is the issue? 141.8, look, based on what I just told you, what's going to happen at some point during the year? I'm in a cap. So I need to figure out if that's going to happen on this paycheck. Okay, so I've got to tell you some stuff about the pay scheme. How many times a year am I paid? 24. And I run payroll on the what and the what? 15th and the 30th. And I've got to tell you that because it could be anything. It could be the 2nd and the 16th. It could be anything. And today I'm trying to run December 15th's payroll. So the first thing you have to do is figure out and make sure, I don't know how you convince yourself that it's not today, you've got to get the prior year-to-date cumulative total. In other words, what did she make all year before today's payroll? That's YTD, is year-to-date. Is that something you can just go boom and calculate, or do you have to have a couple steps? Okay, what do you think the first step is? One more time. How much is her regular gross times what? Okay, no, not 24. Times, how many times has she been paid this year prior to the paycheck I'm running? Okay. Okay, everybody do their math and then we'll meet there. What are we looking at? I'm sorry. Oh, pardon me. Yeah.
Katie, I went off of all your stuff, but obviously we didn't have rank until, or professor rank until later.
Okay.
So that kind of doesn't matter, but the dates of your merit, he wants to know what dates you received merit.
I just took that off of the file Katie gave me. I don't have any particular memory of it.
I know, and this is what I grabbed out of your file, so if you want to just confirm that.
If that's what's in there, there's nothing I'm going to do that's different from what anybody gives me. I mean, in fact, I wouldn't have thought I got it that many times.
So, but the last time you received it was that.
That does make sense.
Yeah, that's what I thought. Okay.
Okay, good, thanks. Okay, did we get to our year-to-date prior gross? How much do we think that she makes every time she's paid? Divided by 24. Okay, 5908. And then how many payrolls were before today? Times 22.
Oh, she gets paid one more time.
Okay, so if she made this before today, and then today, i.e. 12/15, she's going to make another 5908.33, what's going to happen? That very thing I was talking about. She's going to straddle the cap, isn't she? Okay, so and I can see that. Let's just prove that to ourselves. Plus 5908.33. So when she's done with this paycheck, she's going to be here, right? So you need to figure out part of that. Okay, first off, let's just do the easy part. How much of the 5908.33 do I need to pay HI on? All of it. That doesn't cap. The second question is, how much of the 5908.33 does she have to pay OASDI on? And the answer to that is just the difference from this up to the 132.9, right? All right, so see if you can figure that out. So 132.9 minus 129,983.33. The amount I'm paying OASDI on is this amount. That's the difference between this number and 132.9.
Do you want to take 132.9 minus 135?
Because that's the amount over.
That's over.
I want to figure out the amount up to.
Oh, gotcha.
And then HI is the full amount, right? Nothing tricky there. Yeah? How much is going to be withheld from her December 30th check for FICA? You don't even need to pick up your calculator.
85,
Yeah, just the 8567. She's done with OASDI. Right? My question was, what does she have withheld on her December 30th? You don't even need to pick up your calculator. You know she's done with OASDI.
I'm sorry, I'm confused of where that 291667.
Okay, help us out. Help us out. Where did that come from, you guys?
The cap minus the amount she made for this paycheck, or the annual.
I'm stopping here, Lise, right?
Mm-hmm.
How much have I made before today?
The 129.
That is this number.
Okay.
Okay? It's a very common error, what Hannah asked about. Well, why am I not getting the amount over the 132.9? Who cares? You're done paying OASDI. I need to figure out how much to withhold up to the cap. It's different for this guy because you do care about what's over the cap there, don't you? Because then you'd have the tack on. All right, let's try another one of these. 225, 1130. 225, 1130. Okay. Second question, or second example. I'm the development director for one of these startups I was talking about. And the way they always explain their business plans, and they lose me on the third words where they say high tech. And then I just kind of go blank. That's not true. I understand some of them. There's a new dating app that's one of the darlings of Silicon Valley right now. Not for Lifetime or Life of Me. Remember what it is, what the name is. But they said it's going to make Tinder obsolete. So there's just always the next generation. And actually, this time I want you to, run the payroll. But obviously, again, you don't know fit or sit. So run the whole check.
doing FICA, right?
Yeah, yeah. How much does she make a paycheck? I could squeak by on that. Okay. Oh. I thought you were laughing at my funny joke. No, we're not laughing at your funny joke. We all had martinis for lunch. Okay. So then the question is, I obviously then the next thing I need to figure out is minus my OASDI and minus my HI. Should we do the HI first? Well, no, let's figure this out. Because this person actually has two potential issues, right? One is he or she goes over the 132.9, obviously, at some point. And then the second issue is at some point he or she goes over the 200 grand.
So first you want to figure out what that paid.
You've got to do that prior year to date gross. How many times has she been paid before today? 10. Because I'm running November 30th. So she was paid January, February, March, April, May, June, July, August, September, October. She's paid 10 times. So do I need to worry about OASDI at all? No, she's long capped. But the issue on this person is what? Part of it's going to be at the, what rate? Part of it's going to be at 1.45 and part of it's going to be at, yeah, so figure that out. And probably the easiest way to do it, you guys, is figure out the 1.45 on the whole amount and then just the tack on the 0.9 that goes over. Yeah. Chapter was the one with the ratios that we didn't do in finance. Remember? Chapter 1. Okay, so times 0.0145. So 271.88, right? Plus 187.5 plus 18,750 puts me to 206,250. So only 6,250 of it has that additional 0.9, right?
No, I couldn't do it. I can help you with I had put the phone line.
Yeah. So that's what 9% looks like in your calculator, right? Or 0.9%, excuse me. 2 decimal places to the left. When I'm asking you to run the check, and again, that's obviously not really what the net check's going to be because you've got FIT and SIT in there, and those are going to be huge chunks. Okay, next concept. Keep it coming. Okay, now we've got this issue and we've gone through all these numbers, so none of this should be new. Self-employed tax, right, SE tax, 7.65 plus 7.65 equals 15.3. SE tax is paid on all of your net earnings. So if I'm a farrier, right, and I go around and I shoe horses, and I bill my ranchers 30 grand, but I've got $10,000 worth of supplies and car costs, what's my net earnings? 20 grand. Do I pay SE on the 30 or the 20? The 20. So you just take, it's a profit and loss, right? Revenues minus all your expenses, that's your net earnings. If you've got like some little piddly something, like I sell a couple tubes of Mary Kay and you earn $80, do you have to do all this? No, you got to get over 400 bucks. And once you have net earnings over $400, you have to do it. If you own more than one business, I've got a number of clients that do this. So one of my businesses makes money, right? I'm the farrier. And the other one, I'm an equine photographer. And that business loses money. I can offset the loss from one with the profit from another, and then I pay self-employment tax on the net. SECA, we know what that is, Self-Employed Contribution Act, 15.3, plus the additional 0.9, we know that, and we only pay one share of that. You should be able to say this in your sleep. Can you have a W-2 and SE income? Sure. That describes a hell of a lot of people in this valley. Like, I've got a job, but that's not really enough money to live here. So I do something on the side. So does my job and my SE income go together towards that 132.9 and that 200,000? They do. And that's where it gets a little tricky. And then we know that we put our self-employment income on a Schedule C that attaches to my 1040, right? And then you've also got to fill out another form called a Schedule SE, which reports your self-employment tax. But here's the situation. Here's our next challenge. 138,768 and 14.5. 138,768 and 14.5. So here's the situation. Celia is a litigator, and she works for a law office and makes $138,478 on her W-2. So has she paid FICA on that at her law office? Of course she has. That's not our challenge. What our challenge is Celia also does some arbitration on the side. And she has first off, what is all this stuff? What's SE income? Self-employment net income. Am I telling you what she grossed or what she netted? Huh? Netted. Income is net, revenue is gross. There's way more to it than that, but for our purposes. What's a 1099 MISC? It's what you get when you're an independent contractor. If I'm an employee at the end of the year, what do I get? W-2. If I'm an independent contractor at the end of the year, so in Missoula, a lot of the arbitration is around divorce, and the organization that's the umbrella for that is the Jeanette Rankin Peace Center, which is kind of cool. So people are like, I don't want to spend 50 grand getting divorced. Let's have an arbitrator. So the Jeanette Rankin Peace Center cuts her a 1099 miscellaneous for her arbitration services for people splitting property, divorces, businesses, splitting, whatever. My question is, how much is her SE tax on her 1099 miscellaneous? And to be honest, it's one algebraic calculation, just boom. I'll give you a couple seconds to think about it, and then we'll take a look at one that's a little more complicated.
What did you just own 14,500?
Yes,
Employee tax. Not under W-2.
it's not under W-2. But the question is, what's the percentage? She need to pay any OASDI? Why not? She capped at her job. How many shares of HI does she need to pay? 2. 1,405 times what's my percentage I plug in? Sure is. $2.9, right? 1.45 plus 1.45. All right, next example. 68,250, 68,250, 94.5. 68,250. This time, my client Anthony is a data analyst, and he's got a job with the Bureau of Economic Research, the university. It's W-2 68,250 from UM. But really, the world's his market. So he goes online, he develops an online business, he crunches data and does analytics. He's got a pretty good side gig. His SE income is 94.5. I'm going to help you with this one. But what's the issue here? He's going to straddle the cap with his SE income because he's already paid, right, full OASDI and HI in this loan. So let's figure out how much he's going to get to in total first. So when all's said and done, Anthony's got a quite nice little combined income here, right? Do I care what do I care about this 94.5? I'm paying both sides. So let's do the easy part first. What's the easy part first?
Self-employed tax.
Well, there's two parts of SE tax.
The easy part's the HI.
Let's do the HI, that's easy peasy. So figure out how much HI Anthony pays. What is that equals what times what? How much, Cammie? What percentage? It is. Now with OASDI, what's the issue? Right, so he's got to pay, what's his wage base? In other words, is he paying on the whole 94.5? No, I'm only, how do I calculate the amount of the wage base? What minus what? Go ahead.
Would be the cap minus what you already paid on.
Yep, the cap minus what he's already paid on. What is he already paid on? 68,250. It was really the same thing as we did with the high income people that were just wage earners, except for you've got to pay attention to both sides, don't you? I don't care how much you went over the cap. I care how much it is up to the cap. What's my percentage? 0.124. Good. So even though we're not really worried about Anthony starving, on his 94.5, he's paying this in SE tax, and that doesn't even count as income taxes, you guys. That's going to take another 30% bite out of there. There's another 27 grand's going to go to tax, income tax.
Hey, what's the percentage?
Well, you don't know how to do this yet, but I can tell what income level he's at. He's going to be at about 6% for the state and about 24% for the feds. Okay. Have we had enough fun or our heads throbbing? Okay. Let's, please.
What if they get a bonus in there?
Bonuses, super great question. We're actually going to cover bonuses in Chapter 4, and there's something called supplemental wages, and you've got to pay full FICA on it, and then there's a different way of calculating income tax.
Because on the homework, it has a bonus question.
We'll just treat it like regular wages for this chapter. Okay, let's turn off this guy. No. So